Billionaires don't just earn their money, they protect it strategically. Through smart investments, legal structures, tax planning, and asset diversification, they minimize risks and ensure their wealth grows over time. While most people focus only on earning, the ultra-wealthy focus on shielding and multiplying their money. Understanding these strategies can give you insights into building long-term financial security. In this guide, we'll explore the key ways billionaires safeguard their wealth and how you can apply similar principles, no matter your income level. Today, we will talk about how billionaires protect their money. So before we start, make sure to hit the like button and subscribe to my channel. 1. Diversification across assets. Billionaires understand that putting all their money in one place is risky. They diversify across multiple asset classes including stocks, real estate, private equity, bonds, and alternative investments like art or collectibles. Diversification reduces exposure to market crashes in any single sector. Even if one investment loses value, others can offset the loss. Billionaires also diversify geographically, investing in multiple countries to protect against political or economic instability. This strategy is one of the most fundamental ways to preserve wealth over generations. New investors can learn from this by spreading risk rather than relying on a single income source or investment. 2. Using trusts and legal structures. Trusts, foundations, and other legal structures are commonly used by billionaires to protect assets. These structures separate ownership from control, making it harder for creditors, lawsuits, or taxes to affect wealth. Family trusts can transfer wealth across generations efficiently while minimizing estate taxes. Legal structures also offer privacy, preventing public disclosure of asset ownership. Setting up trusts and corporations is a sophisticated strategy that requires professional legal guidance. Billionaires leverage these tools not just for protection but also for flexibility in estate planning, charitable giving, and business operations. 3. Tax optimization. Billionaires often use tax strategies to legally minimize what they owe. This includes taking advantage of deductions, credits, offshore structures, and long-term capital gains rules. They rarely pay taxes the same way ordinary earners do because they have access to sophisticated financial planning. Wealthy individuals also delay income, invest in tax-advantaged assets, or donate to charitable foundations to reduce taxable income. Effective tax planning preserves capital for reinvestment and growth. While this doesn't mean evading taxes, it shows the importance of understanding the system and using legal strategies to protect wealth. 4. Keeping liquid and illiquid assets balanced. Billionaires balance liquid assets like cash and stocks with illiquid assets like private companies, real estate, and venture capital. Liquid assets provide flexibility for emergencies or opportunities, while illiquid assets often generate higher returns over time. Maintaining a proper balance ensures they are protected against market volatility while still capturing growth potential. Many wealthy individuals hold only a portion of their portfolio in cash to remain agile. This strategy allows billionaires to respond quickly to financial opportunities or crises without being forced to sell long-term investments at a loss. 5. Insurance and risk management. Protecting wealth also means protecting against unexpected losses. Billionaires use insurance extensively: property insurance, liability insurance, and even specialized policies like kidnap and ransom or art coverage. Insurance mitigates risks that could otherwise destroy wealth in a single event. Risk management extends to their businesses as well, including hedging strategies for investments. By planning for worst-case scenarios, billionaires ensure their money is shielded from both personal and market risks. For everyday investors, this translates to using insurance and contingency planning to protect financial security. 6. Investing in inflation-protected assets. Billionaires protect their wealth from inflation by investing in assets that grow faster than the general rise in prices. Real estate, commodities, stocks, and inflation-indexed bonds are common choices. By ensuring their assets appreciate in value over time, they maintain purchasing power even during inflationary periods. Cash alone loses value over time due to inflation, which is why billionaires rarely keep large amounts idle. Understanding inflation protection is key for anyone looking to preserve wealth, as ignoring it slowly erodes capital even without market losses. 7. Philanthropy and charitable giving. Many billionaires use philanthropy to protect wealth strategically. Donating to charitable foundations can reduce taxable income while creating social impact. Foundations also allow control over how money is distributed and preserved across generations. Philanthropy can enhance legacy planning and reduce estate taxes, allowing more wealth to remain in the family or organizations they care about. Giving strategically is not just about generosity. It's also a sophisticated financial tool used by the ultra-wealthy to protect and manage large fortunes. 8. Using professional financial advisors. Billionaires rarely manage their wealth alone. They hire teams of financial advisors, accountants, lawyers, and wealth managers to monitor markets, structure investments, and plan taxes. Professional guidance ensures that assets are not exposed to unnecessary risks and growth opportunities are maximized. Even small mistakes in planning can be costly at this scale. Experienced advisors help billionaires navigate complex investment options, legal structures, and global financial systems. For anyone looking to protect and grow wealth, seeking professional advice can be a game changer. 9. Hedging and alternative investments. Hedging strategies like options, futures, and derivatives are commonly used to protect against market downturns. Billionaires also invest in alternative assets like private equity, hedge funds, and startups to diversify beyond traditional markets. These strategies reduce dependence on conventional stock or bond markets, which are more volatile. Hedging allows them to limit downside risk while capturing upside potential. Alternative investments often require expertise and significant capital, but even smaller investors can learn from the principle. Diversification and protective strategies safeguard wealth in uncertain markets. If you liked this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.